everyone, welcome back to Corporate Decoder. Today we're diving into a filing that might make you question if this company is playing dress up or actually building a business. Spoiler, it might be dress up. We're looking at Keemo Fashion Group Limited's latest quarterly report. A document that promises insights but delivers a roller coaster of numbers. Want to know if they're really in fashion or just fashionably broke? Stick around. Before we get started, if you like getting straight insights from corporate reports, make sure you are subscribed to our channel. We also have a Discord community linked in the description below if you want to chat more about this stuff with people. First up, this document is a Form 10Q. This is a report that companies put out every 3 months or quarterly to let everyone know how things are going. It includes financial statements, updates on what the company is doing, and any important changes or events. This report concerns Keemo Fashion Group. There are some basic details that you're supposed to have in the form, like the address of its main offices, which are in Shenzhen, China, and its phone number and website address. Now let's hit the financials. The amount of common stock they have out there as of June of 2025 is 55 million shares. It looks like they have not changed their number of outstanding shares. Okay, let's get to the core of it with the balance sheets. This is where we see what the company owns, what it owes, and what's left over. So as of April 30, 2025, Keemo Fashion Group had total assets of about 23,474. Has total assets declined over the 9 months since July. Cash is at around 22,500 the 9 months since July. Cash is at around $22,500 and $407. Total liabilities were roughly 94,908 total liabilities, were roughly $94,000 of about $23,001 and compares to about $2,800 in July of the previous year. So total assets declined over the 9 months since July. Cash is at around 22,519,719, so it looks like the amount that they owe has gone up since then. And here comes the kicker. $6 is a small in their assets. Back in July, total liabilities were roughly 90, so it looks like the amount that they owe has gone up since then, and here comes the kicker. Total shareholder equity is negative. That is not good. Negative $71,838. Shareholder equity is assets minus liabilities. This is what's left over for the owners of the company if they sold everything and paid off all their debts. So this isn't just a small loss. This means they are in the hole. Back in July, the shareholder equity was negative $48,945. While still negative, it was much better than the figure now. Let's examine sales, expenses, and overall profitability or lack thereof. The 3 months ended April 30, 2025 had revenue of $5,124. For the 3 months ended $1 in the prior $55. This is down from the prior year's 3 months, which was $2,410 for $5. For the 3 months ended $1 the dollars, for the 3 months ended dollars profit of around $2,555. So revenue has gone up a little bit. Now for the 9 months ended April 30, revenue was $15,081 in the prior $44. So revenue has gone up a little bit. Now for the 9 months ended April 30th, revenue was $15,081 in April. In the prior year, it was much higher at $16,058, $90.74.30. Revenue was $15,000, so that too has decreased to set forth. This is down from the prior year's 3 months, which was $2,014.10, that shows profit of $8,097. Turning to expenses, general and administrative expenses for the 3 months ended was roughly $6,793, $6,793, $6,000 between those periods. What's left over? Net loss for the 3 months ended, there was a net loss of approximately $4,238. In the prior year's 3 months, that was $4,472, so it's about the same. For the 9-month figure, it was approximately $22,093. Better than the loss the prior year of $32,049. I'm down as a result of that. Let's check this company's lifeblood and see if it's flowing or sputtering. For the 9 months ended April 30, 2025, the company's net cash flow has increased by a little over $3,000. In the prior year, for the 9 months ended April 30, the company's cash flow decreased negative $3,500. Most is the cash. At the end of April, the company had $22,500. Most is the cash. At the end of April, the company had $22,005. The end of ending cash flow compared to what it was doing in the previous year. Pantering things around because it got sacked. A little more together regarding cash flow compared to what it was doing in the previous year. Now, let's jump to accounting policies. These are the rules and ways the company figures out its financial numbers. One important one is about going concern. What is going concern, you might ask? Well, it refers to the ability of a company to stay in business. Basically, do they believe they can stay afloat? The report says there is substantial doubt that they can continue as a going concern. They lost around $23,000 over the year, and they owe over $70,000 more than they own. Those are huge red flags. They expect to finance primarily to financial support from a shareholder. The company said in its organization and business background section that they focus on wholesaling to distributors based mainly in China. If this is true, then it would be very important that they are able to establish and maintain relationships. Speaking of relationships, it's important to know if the company depends too heavily on one person. The report indicates that for the 3 months ended April of 2025, all of the company's revenue came from one customer too. If they were to lose the support of that one single customer, it would devastate the company. Similarly, it said that for the 3 months ended April 30, 2025, all of the company's cost of revenue came from a single vendor, so the company's livelihood is pretty much dependent on two relationships. The company has racked up, as of April, about $23,000 of losses, which can be used to lower their taxes in the future. They were registered in none other than the great state of Nevada. Alright, let's move on to controls and procedures. Companies are supposed to have controls to make sure the information they release is correct, and they should have internal controls to avoid problems in their accounting. The CEO thinks disclosure controls were not effective. The report said lack of a functioning audit committee, inadequate segregation of duties, and insufficient written policies and procedures. With all these errors, I have doubts as to whether the company will be improving their internal controls anytime soon. Now let's put this all together. It's easy to see they have some serious problems, and I agree that there's a substantial doubt of it being able to continue to operate their business. Keemo Fashion Group is struggling big time. The financials show a company deep in the red with more liabilities than assets, and that relies too heavily on only a couple of people. Their dependence on a small number of customers and suppliers will put their business in huge risk every day. There are some real serious concerns, and there are some material weaknesses in their internal control. They need to significantly improve their controls, diversify their audience, and improve business operations. If it does not address these issues, there is no path for this company to succeed. Alright, that's our breakdown of Keemo Fashion Group Limited's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And of course, don't forget to check out the Discord in the description. Thanks for watching. See you next time.